And of course, this video is for entertainment purposes only. I'm not a financial advisor. I never advise you buy, sell, trade, or hodl any cryptocurrency. You always need to consult with your own financial advisor before making any investing decisions. Let's get it, man. So can you clearly express what value the KDABET token will have? What utility, governance? Let's dive into all things token utility first.
Yeah, the value prop for sure. So in this case, you know, I think we addressed before in a previous recording the value prop to crypto investor, but now we want to tackle the value prop to the true industry that we're serving. This is the sports betting industry. So to do that, we need to talk a little bit about the corporate side. So I think Joey told you the sports bettor side maybe before. When Joey's one of our partners, if it's just a new watcher here, who deals with sports betting at scale. But now we're talking about the corporate side and what really goes on in these exchanges. If you're a big market maker, maybe you use robots to trade. So you're trading thousands of times, you know, per minute, basically. And how does that economics work in Web 2? So like whenever you build on a blockchain, you should always answer the question, why would you use a slow and inefficient database that is expensive? You should always answer that question. So we can do that, and we can just illustrate the problem of Web 2. So, you know, the best example of what we're trying to decentralize, what we're trying to innovate on is the exchange called Betfair. Betfair is the largest exchange in the entire world for sports betting. They deal with, you know, for 20 years, they've dealt with, you know, the most capital flow in any exchange structure. And kind of what has happened over time is the stockholders, the shareholders, and the VC who back Betfair, and Betfair has changed hands many times and has become more centralized in its ownership. Those shareholders end up draining the value out of the network. So you can imagine you have these sort of three players in sports betting. So this is how it really works. You have market makers. These are people with lots and lots of money who operate on low margins. So they come in, they trade, and they're just getting little tiny bits of money off their trades because they're a little bit more efficient. Then you have what we call the sharps, or the Shark Tank. You know, they're the sharks. They take the bets. They have the best models, the best data, and they win the most per dollar bet. But they don't bet the most money. That's the market makers. So these two forces are always eating the money of the recreational gambler, and that's about 99% of gamblers. They don't win money over time, and they treat sports betting as a sort of a recreational habit, I guess. You know, habit is a bad word, but it's more like just fun, right? You're betting on the Yankees, you love it. Or in your case, Detroit, maybe Tigers are great. So, you know, Miguel Cabrera, great guy. So you're always, you know, betting, and, you know, most people are losing. And it's that flow of money that goes from the recreationals to the sharps and the market makers, and how that is governed that wins. So right now in Web 2, every dollar that you make as a sharp or a market maker is 60% of that is eaten by something called a premium charge on Betfair. So they come in, and if you win any kind of money whatsoever, shareholders scoop it all up and take it all for themselves. Now, behind the scenes, it's a little more complex than that, but that's the general story. It's basically the tax on the bet is now so egregious that people are abandoning Web 2. They can't bet there anymore. And it's just really hard to get money down, as, you know, maybe Joey explained, and it's just really tough for people. After the tax too, the government takes their cut of your money, and there's a gambling tax. It's just, there's not a lot to go around to the people who actually win. And so we're trying to get rid of that corporate structure. That's the whole point of Web3, is that we could basically decentralize the ownership to the people themselves, the people who buy the token. So KDAB, first and foremost, is a decentralization of the ownership structure, and puts it into the hands of people who actually provide the data that make the line sharper, that produce the price, the line, the odds, and paying them for their data instead of stealing their data.
And so can you explain the utility of the actual token itself, though? That's what I'm kind of curious on. As I'm a holder of KDABET, what value do I get as a holder, and what utility does the token have outside of governance?
Well, the first utility is that you reclaim more of your capital. So if you win, you claim more of it back. But also there's yeah, so there's just less tax on the bet, right? So you're not paying the premium charge. That's the first obvious utility. Second utility of this is you're also you're mining the token and gaining ownership. So you're putting a price on your data. So basically 70% of our tokens are to be mined by future bettors. And we have this thing called proof of efficiency. That's our invention. So if you're efficient in your line, let me explain that really quickly. If you bet tigers at 2-1 and the odds end up at 1.8 to 1, when the game starts, you've made 20 cents. We call that closing line value. That is, you bet it at a much better price, and then it went to a worse price, and now you're laughing, right? Because you got a really good price. We call that efficiency or manufacturing efficiency. So when you get that, you mint a little token. You mint it because you provided lines that, or you provided data that made the lines sharper. That's right. So kind of what happens in the Web 2 world is the bookmaker will trade, they want that data from you early because they want to make the lines and move off you. And the problem is in the Web 2 world, basically when you do that, you get front run. Basically, they'll give you a $200 to $500 bet, take your line, take your data, and then move the line to where the odds should be, and then you can't get enough money down. And that's a big problem because if you want to bet 50, 60, 70K aside, it's pretty hard to do that now in regulated centralized sites. So lots of that money gets pushed offshore into dark pools and gray markets, we call them. Unfortunate, but this is the way. So what you're really doing now is you're reclaiming what we call economic rent that is charged to you. So the bookmakers are charging you rent for your data, essentially, by giving you a teeny little line, a teeny little taste of the odds that are good, and then moving off you, and then you lose that value, okay? That value is gone. But here we're paying you for that and encouraging you to give your data early on the protocol, and then the mathematics of the white paper express how that reward is done. So the second utility is you're gaining back the ability to get more money down because you're getting paid by this token for producing that data. So we make a two-way market for the data instead of like this monopoly that just eats it all like a giant dinosaur. So it's terrible. And then the third utility is the governance. So the token in itself is a betting token, but it's also a governance token wrapped into one, which is really strange, right? Because usually governance token is different. It's like it's a second token that sits on top of the transaction token. But in this case, it's one and the same. And what the governance does is every month, it allows the people who hold the tokens to basically vote on how much that mining emission that we're talking about for efficiency goes to either recreationals or it goes to sharp bettors and market makers. So there's a little math formula that everyone can vote on to tweak. And if we're not pulling in enough recreational customers, which is critical for buy pressure on the token, we can adjust that. You give them a little more reward. All the market makers agree it's in the best interest of the network. You get more capital inflow. However, the other side is if there's not enough liquidity and recreational players are getting all the rewards, it's great. It's like a panacea for them. If they come on and there's no liquidity, then they don't get matched up. The UX experience is garbage. And you end up like one of these, what you call ghost exchanges that are on Solana and Polygon, just they're ghosts. They have no volume, zeros. So what you're trying to do is now change it so that the market makers and sharps get more, they can vote on this with the governance token once a month. And so can the Rex too, by the way. And we all vote to say, look, let's provide a little more reward to the liquidity providers so there's more money to match up earlier and often so that our experience is just tops and we can get down. So that's the idea of the token. Those are the three utilities.
Very, very smart, man. Very, very smart. And can you explain a little bit more about the mining aspect? I guess I'm not really understanding how I could actually, I guess, I don't even know if the word mining is accurate. Is that, I think I'm mining, like I got to have a GPU running in the background to actually do work to get rewarded in a token.
Yeah, it's pretty unique the way we're thinking about it. So let's actually compare that to what you're talking about. So yep. I love mining too. I mine all the time. Ethereum now, but Bitcoin's a little above my reach. But if you talk about Bitcoin, the idea of Bitcoin is that you're solving like a complex math problem, a hashing problem, where you're trying to basically fire in a bunch of guesses on what the solution to the hash problem is. And then when somebody gets it, it's like a race between the nodes, right? As they're trying to race to get that reward. And what the essence of that is that it's a hard problem to solve. And as the halvening happens, it gets harder. So I don't know if that's a good halvening there, but you get the idea. It gets harder and harder to mine that emission over time, especially as there's more competitors fighting for it, right? And that's a beautiful game theory Bitcoin came up with. And so in our mind, we looked at sports bettors, and my job in sports betting is an originator. So I'm one of the very best in the world at baseball, perhaps not number one, but pretty close. And the amount of effort that we have to put into building up mathematical models to beat the line is absolutely stupendous. It's a hard mathematical problem to solve. Maybe 1 in 1,000 players in sports betting can do this and still win money at the end of the day. Most just lose when they try to build models. So if you think about it, it's a proxy for a hard problem. You're just taking the hard problem of hashing and taking it out and inserting the hard problem of solving a sports betting market. And what that means is that everyone comes in and they bet, and you get a certain price, and then you get an efficiency at the end. And depending on how efficient you are and how good you are at solving that hard problem, over time, okay, this is, anybody can get lucky, right? They can just come in and bet and you get CLV, big deal. But doing that over a long period of time in multiple markets is quite comparable to solving Bitcoin at some level. So you can get the idea that it's like instead of mining with a GPU, what you're doing is you're by proxy solving a really hard problem and then inserting your solution in and seeing if it's right. And that's the mining mechanism. So if you get it right, and you get it right by a lot, you mine more shares. And so you can imagine the market. Here's a market, Boston versus Yankees. And in the market, you have a bunch of transactions, and they're just bets.
Yep.
And there's a reward that's attached to the block. And then when it's all over, you weigh the efficiency of everyone, and it's basically a proportional ownership of that block over here. My hand's going backwards the other way because of the camera, but yep. You're mining that block basically of tokens that are attached to it. And that's the trick of it. And the more efficient you are, the more you get out of that block. And every new game, every new Yankees-Boston game is another block of coins you can mine.
Wow, man, that made so much sense. Every time I hear the word mining and I'm not actually using a GPU, it's normally a Ponzi scam, like a project that's trying to make up something to sound like mining. And I don't want people to get that impression of KDABET because it's completely different. And you guys have the ability to always, I guess, you guys have a finite supply, right? And the idea behind that is by the time that your coins are all out, the infrastructure that you built, the amount of players, the amount of recs are so massive that you don't really need to incentivize anybody because the liquidity will be there, right? Because all the people will already be playing on your site. So there's no need to incentivize more new blood to come in. It'll just attract itself because you guys will be the place to be for online sports betting. Am I understanding that right?
That's correct. And then we have all the mechanisms of Kadena and Pact to make sure everything's secure, quick, scalable, and safe. Most importantly, safe. Like, the biggest problem at betting at scale is, can I even get my money? Like in the end of the day, it's pretty tough. I'm sure Joey told you some stories, but it's just awful.
Oh man, you're saying it's a nightmare to actually get liquidity on and actually get orders filled, especially for the bigger players that, you guys have, what they call them, beards and markers and all these players that help you guys execute orders and fill orders because it's so difficult. And why is it so difficult?
I don't want to bag of quarters at Kmart, right? Like,
yeah, you said he got paid in gold bars one time.
Big gold bars. Yeah, with lead with gold over it. Serious. Yeah, I'll show you a picture. I'll send it to Twitter.
Oh my gosh, that is awesome, man. That's so funny. So what you guys have a very successful Web 2 business. Very, very successful, one of the best in the industry. And now you guys are making a complete drastic change to come to Web 3. What is the motivation if you guys already have a successful business? Is it part of everything's moving to Web 3? If you don't evolve, you will get left behind, or is there major upsides to building? And I know we had talked about in a previous interview, we also had this idea back in 2016, 2017, but it wasn't possible on Ethereum. So can you explain now why we're going into this change?
Okay, so that's two questions, and we'll take the first one first. The first question is, if you're so successful in Web 2, why would you bring it here? Well, the success is going down. And the reason is it's harder and harder to get large scale capital down without slippage in your odds. So if we think 2 to 1 is good and 1.9 is our is our limit. Like we don't want to bet much more past that. So 1.9 to 1 odds, maybe on the Tigers. The minute we bet, it starts slipping super fast because all these centralized bookmakers talk to each other through back channels. So they have companies like, I can't name the company because I don't want to disparage, but there's actually, they all talk to each other behind the scenes and share data. So that the minute anyone sharp, because everything's KYC, anything sharp comes through, everyone moves off your data, right? And so on Kadena, the thing is that we can make sure that we can use Kuro. So this is a good thing. Like we'll get into Kuro a bit later, but you can have like this thing where you can hide your bet until it's filled. And that's kind of how things work in financial markets when people are trading equities and stocks and bonds. If you're a really, really big player, you don't trade on an exchange because people will see your bet and front run the crap out of you. And that's what happens in Web 2. The minute you get down and you're known and your account is known, all these vultures come out and copy your bets and destroy your odds. And more so, they alert the bookmakers of your edge. So if you found like a unique way to win in baseball because you figured something out. So I'll give you 2 examples. One is the new balls this season in baseball. They changed the ball. So Manfred did. And so the ball doesn't travel as much and the home runs are down. So right away, you can just bet everything under in the first month, and that made us a fortune. But you can't signal that to the sports book. So hiding your bets until your positions are filled is so critical to success. And until now, it's not possible. We just have to like get all these accounts and then spread the bets over the accounts, and it's just a nightmare. It's a logistic nightmare to bet at scale of any kind. So it's not actually winning that's hard; it's getting money down. And so decentralizing these centralized sports books who basically treat you as cannon fodder and laugh at you and don't care about you is critical. And so for us, building on KDABET is a passion because our industry is dying a little bit. It's sinking. A lot of people, talking heads in the industry, will say no. But when you look at Betfair and all the market makers are leaving, there's a couple of famous articles in the last month that came out of just people giving up because you can't make margin anymore. There's no point in doing it. And then you see Jason Robbins of DraftKings say, we will not have winning players on our system, like literally saying that in large scale conferences where he's sitting as like the keynote speaker. You can tell what the centralized Web 2 guys want to do. They don't want winning players.
Say that one more time. He straight up said that he will not have winning players on his site.
Paraphrasing that, but essentially that is exactly what he said twice, actually, and it's going around. So in Twitter we have a little group of people called Gambling Twitter. They're very vocal. Yep. So when Robin said that, some big guys in the Twitter with 50, 60K accounts, they're complaining about this, or because he's saying this. Essentially, we only want recreational players. We do not want to serve the dynamic between the recreational and the sharp. Why? Or the sharp and the market maker. Why? Because the market maker and the sharp take all the profit. We want all the profit. That's what he's saying. And we think that's wrong. We think we should serve the dynamic between the market maker and the sharp. And maybe these VC and big executives who are paying themselves $10 million a year can kind of back off a little bit and let us have our little network where we can actually get back to the old ways of gambling, like Vegas used to be in the 80s and 90s when it was good. It was a good system we had in the 80s and 90s. And many people in the gambling community will tell you that. And it's gotten worse over time because technology has given them massive monopoly advantage over us. So we're trying to get away from that and make our own network for us, owned by us, where we can decide what our data is worth in that relationship between losers and winners. Maybe even give the losers something back for their time.
What is the goal, I guess, between the amount of liquidity you need on something like this versus how does Floyd Mayweather place $1 million bets on sporting games? How are these big, huge players placing $1 million bets when you guys can't even place a $20,000 bet?
Because Floyd loses. I'm not going to lie. I mean, when he wins, he posts those big pictures. If Floyd Mayweather, like, God bless his soul, maybe he's listening one day, but he's an amazing athlete and everything. I don't want to disparage him, but he's not a winning sports bettor, period. And so when they bet the millions, like Mattress Mac is a famous guy in sports betting for betting $3 to $4 to $5 million on the Super Bowl. You see centralized guys like Pinnacle, actually no, Pinnacle is much more ethical. Sorry. Let's just say Circus Sports takes their bets, for instance, in Colorado there in Vegas. They'll take his bets all day long because he's going to lose every time over time because he's not using mathematical models. He's not sophisticated. So of course you're going to take Floyd's money because in the end of the day, you're going to make hold on that, which is the percentage money you hold after probability. You make a certain amount of money per unit bet, like 3% or 4% or something.
Wow, that's crazy that people, it's crazy that people, because Floyd Mayweather's into these rug pulls and these scams and promoting shit NFTs. He rugged me on, so you don't have to be nice to Floyd Mayweather, man. He owes me about $3,000. So bastard. I'm not even kidding. He built that Bad Bunny's NFT. It's like a whole thing of a whole slew of them. It's all the dude does is promote shit, scam coins. I'm surprised that he doesn't reach out to somebody like Joey, or Joey doesn't reach out to somebody like him. Man. Don't get in a fight with him. Yeah, right.
Yeah. I wouldn't want to.
No, heck no, man. He's got unlimited amounts of money, but why doesn't somebody like Joey turn him into a beard? Like, it seems like that Floyd Mayweather would be looking for people like Joey saying, hey, who should I bet on? Like, can you give me a line? I'll cut you in for 10%, you know?
They absolutely do. That's called whale accounts. So
they do.
You love these guys who lose and have $5 million limits because they'll bring your account to you and then you can slam them for 30, 40, $50 million in volume before the bookmaker figures it out. But bookmakers are pretty significant, or, they're not stupid. These people are not stupid. They're big companies with scientists and bonus abuse teams and stuff. So they're always looking for that. But if you're clever and you're smart about it and you don't push it, you can take a whale account and just, you get the idea. I don't want to get too much into that. I might get in trouble, but.
Yep. No, that's great, man. I love the honesty, man. We appreciate it. So, I mean, I've heard everybody talk about a governance token, right? Like, big deal. You guys got a governance token. Tell us more. What separates you from everybody else?
The difference between a governance token and us is we have a store of value token and a governance token in one. Okay, so that's super, super important to understand about our token, is that we're really trying to store the value of this precious data. And let me tell you why. Let me tell you why it's storing value. You only store the value of something if the supply of the asset behind it gets more and more scarce, right? That's the idea. Behind Bitcoin, it's the same way. So let me tell you how things get scarce in our economy, and therefore you're storing the value of the token, and then you get to vote with that token as well. So it's all wrapped up in one. So the idea here is that we have, of course, a fixed supply. So you can go to Stuart Popejoy's report on that on Kadena Research. He says fixed supplies are good because what you're doing is you're serving a community and trying to store the value in your token by basically making that emission get less and less over time. So it's depreciating, it's decaying over time. So at the start of the
depreciating inflation rate, right? So they call it a depreciating inflation rate.
A DIR. That sounds pretty good. I think I'll use that for now. You're always teaching me something, so I'll use that now. That's kind of good.
Let's do it.
I like that. So DIR, and the idea here is that we're going after the network effect. That's what any crypto play should be going after. Is like you have a big network in Web 2, and you want to bring that network into Web 3. And then by Metcalfe's law, the bigger the network is, the more value the underlying asset that makes it tradable is. That's just mathematics. It's hard to argue against Dr. Metcalfe, but you get the idea that when we emit lots of tokens at the start to the people who figure it out and get on, what we're trying to do is really, really reward people at the start to get that network rolling off the ground, to get that first mover advantage. And when we have our competitors who are just making what you call a utility token and a governance token, and they're wrapping them up in one, and some of them kind of actually separate them too, and then make it really complex, because it's like, what are these two tokens? Like, I don't get it. So you get the idea now that if it's a utility token, bettors just use it as working capital, okay? Because there's no deflation. So there's a couple famous ones which do slash and burn systems with inflationary economics, and all of their token goes to zero over time. Period. The reason it goes to zero over time is bettors come in, they buy 500K, price goes up, and then they win money, and then they drop 750K because the market makers always win in the end. So you're actually selling more than you're buying, always, and you have to burn just to peg it to like a certain price. But then people figure that out, that the token will never go 40, 50x because you're not storing anything, because nobody's keeping their data on your chain at all. They only bet when they see the odds are shit, and then they come on, buy 500K, dump 750, and now all you have is sell pressure, constant sell pressure. So in terms of our token, now with the deflationary mechanic, no inflation, no slash burn, it's just 100 million tokens, and we got exponential decay over time. There's natural deflation in the emission. So supply must decrease. And as long as there's mechanisms to incentivize people to hold the token and not treat it as a trading liquidity pair or something, you get a lot of buy pressure, which I can't say what it actually will do, but you get the idea. It's you put buy pressure, perhaps a probability, but even more so, there's other pressures happening in sports betting right now. So there's this certain pressure I want to let you know about. It's called the pressure of increasing data availability. So 10 years ago, I was printing, 8% ROI per dollar spent. Seriously, like I was just crushing baseball because I was using machine learning computations to produce probabilities, and I was one of the only ones doing it. And that's because baseball came out with pitch mechanics data. And as a physics guy, I knew how to use that data and abuse it. But then all these other guys started getting on and started using that data, and my data became obsolete. And every year I got to try harder and harder and harder. It's getting hard, man, because there's a lot of smart cats out there now who are fighting and trying to take my meal off my plate. And they succeed, and a lot of times they find the angles before me even. And so you can imagine that as data gets more and more rich. So right now they have these tracking cameras. There's a wonderful company called Traject Sports that I did a little work with, and they got like these beautiful pitch machines, and they can like track things with cameras called TrackMan, and it's amazing the data that you can pull out of just like the pitcher's mechanic. When you get a smart guy who knows math, they can take that and get better and better at producing probabilities. So there's a natural pressure as data gets richer and richer in our society that more and more gamblers get just smarter very quick. And then there's like software now, you can just press a button and you put data into it, press a button, and then at least it's not a winning calculation, but it's pretty close to winning, and you don't have to put in a lot of effort. Where 10 years ago, 20 years ago, you had to put in, almost no effort, but now like you can just get really good calculations, and there's a natural deflation to the ability to produce what we call the edge. That is the efficiency to set the line. So more and more people are creating great models and then fighting me, and it's just harder to win. So there's that natural pressure. So that's the second pressure. And then there's a third pressure, and that is as the network grows, more and more people who are sharp get on the network, and then it gets harder and harder to mine that token because everyone's getting a share, right, who participates in the market. So if there's only one market maker, they're getting a lot of the share of the mining emission. But if there's 10 market makers, you're fighting against them, and you got to come in early, and you got to come in hard. So the math in our white paper is based on volume and efficiency together. So if you bet a lot early, you're probably going to make the most emission. And you can imagine all these people fighting to get it when they figure it out. So we haven't purposely marketed to sports yet. So you can imagine like when people figure it out and they're like, oh, I can make an extra % every time I bet, it's lights out. So those are the three deflationary pressures on the token. So that's different than the other type of token, which is just inflate and burn.
You had mentioned that the Kings get you a discount on fees. They save you up to 2%.
Yeah, when they're leveled up to the highest levels. So what we have is the NFT, the Kadena King. And, like we said before in the NFT part when we were talking about that, we want to make sure that people de-risk their investment, crypto investors. It's very important. So there's common in Web 2 are these types of ways to get recreational players to come play with you. You'll give them a little boost to their odds. So instead of the Tigers 2, I'll give you 2.03. Make an extra 3 cents on every dollar you bet. And that's just a gift to you. Or they'll free roll you. So you can bet 19 times. I'll give you your 20th bet for free for $100. You just get a free bet on us. And that just, because they know the recreational player won't win over time. So they'll give them, little benefits. They'll take a little bit less to make sure that you stay on and keep betting. And that's the thing. So we wanted to put that mechanic in the King itself. So the King NFT will have all of these mechanics like bet boost and free roll and raffle to win courtside tickets if you want to spend your energy that way, and also a passive income option. So we're going to give many options to the King. You can choose your level of risk, but the big one I think is the passive income. And generally in centralized sports betting, most people will charge anywhere between 2 to 6% on the bet. So Ryan, we bet $100. You take 100 off me. You're going to pay the sports betting exchange probably $5, and that $5 goes to shareholders. But we don't have shareholders because we're just a protocol. So that $5 goes into a pool in a smart contract, and only a King can unlock that. That's it. So the King has the administrative token. You get into the Pact, you unlock that part of the smart contract, and if you decide to turn that on, you will get an emission from the pool that adds up. And that de-risks crypto investors who are investing, because let's be honest, we're still a risky product, right? Any crypto product is risky by nature compared to Web 2, which is a little more, bricks and mortar. So we're trying to build these kings to give investors, and the only way you can get a king now is to take part of the IDO. That's it. Never again will we ever mint a king. We want to give you the ability to, mitigate and make a couple bucks off your investment as well, just in case, token going up and down, you want to make sure that you're making your upside, which is the crypto investor concern.
That's awesome. That's really unique. Now, say you guys do all this and it's still not enough to support the floor, right? Price keeps going down and down and down. Have you guys looked into any additional utility ads where maybe bigger whales are incentivized to stake? So if, say you're a player and you stake 100,000 KDABET or $1 million, right? For 30 days, then maybe they get access. And then if you stake for 60 days, you get a little bit more. And you incentivize the bigger players to say, if you keep a million coins staked for 1 year, you actually save 0.5%. Do you guys have any backup, like any extra measures or ideas or thoughts that are in the works just in case what you're doing is not enough?
Yeah, although we understand the notion of the stake, we do not believe in proof of stake. We're proof of work guys, 100%. Yeah. We don't think staking belongs in protocols at all. And I'll strongly advocate that proof of stake is not something we would ever want to get behind or support, period. Although I understand why people do it, because it could be profitable. What we're trying to do is build that mechanic in the token with the governance. And again, I'm going to bring you back to the point that if the market makers are suffering, they can vote and explain to the REX that they're suffering, and then they can adjust how the emission happens so that they get a little bit more and the liquidity happens there. So our governance token is dynamic in the sense that we're asking people to vote in the best interests, I suppose, of the token. So if you're voting to be selfish, what's going to happen is, if you're selfish and you're a wolf and you eat all the sheep, there's nothing left to eat, the network dies. If you're a sheep and you want to kill all the wolves off and take everything for yourself, then there's so many sheep that you don't make a dollar. And so what we're trying to do is give the mechanism for people to vote. And the little math equation is in the white paper. It's very succinct and simple. You vote on it and you say, look, let's do it that way instead of making artificial incentives like, Do Kwon style, 20% APY. We don't want to do that. We want to build a proper structure that serves this industry and not the interests of crypto industry. I love traders, and God bless you. You make the world turn in crypto, but this is about sports bettors and what we're building for sports bettors. And it's really the king that gives back to the crypto investor. And that will only be KDA investors. We're not interested in other chains, just Kadena.
Yes, sir, man. You guys are my kind of people, man. You guys understand. Yeah. I think that a lot of people, it's going to take people a little bit to understand that from what I'm seeing is you guys are a different type of crypto project, right? You're a legacy project that's coming into the crypto space, but not necessarily to be a crypto, right? You're using you're taking full advantage of the blockchain, which is Kadena, to build a business which is different than everything else. Having the ability to invest in KDABET is just really a bonus, because the real utility, and you don't need crypto to survive for you guys to win. You guys are all about sports betting. Crypto is just the aftermath, the after effect. I think it's going to take people. I would just realize that when I was asking those questions, I'm trying to understand how you're doing crypto, but in reality, you don't need to do crypto, right? Like you're building a complete environment, a complete network, a complete ecosystem that revolves around something that has nothing to do with crypto.
We specifically need the decentralization aspect. That's the decentralizing the ownership to the market makers and the REX. That's our connection to crypto. We really, really need the programmatic escrow as well. That's huge, because right now, like I said, bags of quarters. We don't want that. We want to make sure that when our money is down. So I'll give you another hint why we need this. This is famous in most sports betting plays, banning and limiting. So Joey walks into a casino, he'll turn around and walk out like the famous baby meme. The baby walks in and walks out. Yeah. So that's the life of guys like Joey. It's like, thank you for your business. You can buy a drink and a ham sandwich here off, because sorry, pardon my language, bro, but that's the, I usually don't swear, but that's the idea. So on a smart contract, when you're matched up, you cannot get banned, you cannot get limited. Your coin is your coin, and your wallet is your wallet. And we need that in sports betting. That's a huge aspect of crypto that is valuable. But until Kadena, we cannot secure transactions. Kadena is gorgeous technology because the people who wrote, particularly Will Martino and Stuart Popejoy and their wonderful employees, Doug and Randy, and I think they did a really good job in the escrow here, where you have these pacts where you get in, you make an offer, you match the offer, and then there's a pact which says if you're missing any data, it rolls back the transaction. I think they call that total governance, if I'm not mistaken. Did I get that wrong? I'm not too sure, but it's the idea of if anything goes wrong in the series of functions in the pact, it rolls back your transaction and your money is safe. And that doesn't exist. So I'll give you an example. In Bitcoin betting on Nitrogen Sports.eu, it's the biggest Bitcoin betting site, but it's still centralized. They just use crypto as payment rails, right? What they do is that if they want to, they just seize your Bitcoin. And there's famous posts going around in the last 2 months. A guy named Elihu Feastel talks about that on his Twitter. His buddy just got 50K or 10K, 10 to 50K, I forget what it was, but something big like that just got jacked. And it's happening all the time. So if they're they don't like you, they'll just jack your money. So there's no smart contract. And you can't build a secure smart contract on Sol or Polygon or ETH, period. No, you cannot build a secure smart contract on there that can guarantee this escrow like Pact. So Kadena is, like we said, Kadena, we came to it and we're like, holy crap, they actually built this for a limit order book that works. You could actually secure your transactions and be guaranteed, almost guaranteed. I mean, a hack can still happen, let's not lie. Even on Haskell and underlying is Haskell, it's tops in the safety spectrum in terms of programming languages, but there can still be a hack, you never know. But the probability of that happening is really small compared to the other blockchains. Drastically small for many reasons, and we could talk about those reasons.
Well, let's why don't we do this? Why don't we wrap up this interview? Tell everybody to hit that like, hit that subscribe button, join the channel, and if you got time, we can go right into another. And if you want to dive into Kadena technology, and
do you want to do a side Kadena tech, and we could just talk pure Kadena?
I'm down. You guys down? Yeah.
Oh, I'll do that all day long. I love Kadena. Well, we can just talk raw tech.
Well, then everybody needs to come back and check out the follow-up video, I guess, man. Then it was an honor to, let's end this one up, and we'll dive right into the next one if you're ready.
Yeah, sure. No problems.
All right, man. Well, where can everybody find you at? Tell everybody, what's your guys' Twitter? Where you guys most active in Discords, Telegrams?
Yeah, you'll find me all the time operating the main KDABET accounts. So you'll find us on Twitter at KDABET, Kadena Bet. You can find me also at Highwater Inc., Highwater INC Inc. on Twitter. That's my private company account. You can also find us on Telegram at just KDABET, and that's where we live generally. And we have a YouTube as well, KDABET as well, and you can find us there with some educational videos as well. Not as good as yours though. They're super. I love you.
No, man,
I love
your
great.
It's an honor to have people like you in joining the Kadena community, and I'm not gonna lie, this was the first time I've been excited. I've been waiting for somebody, for Kadena to attract that type of talent, because I'm sitting here, you've noticed that I've pretty much converted my channel fully to Kadena, because it's like I watch these other projects and I invest and I research them, and it's such a hopium hope that their technology might evolve, that it might be safe, that it might be secure. So after doing all this research and finding Kadena, it's like the more you research Kadena, the more you see that everything else is flawed to failure. Eventually their flaws will make them fail at one point or another, whether that's next week, next year, next month. Even interviewing, I'm not educated enough about the tech like you guys are. So it's nice to have somebody that I can actually talk with, because everybody else wants to talk about how Solana, when they upgrade the Ethernet cables that go from here to China, eventually they're going to be able to do 700,000 TPS. And if they solve the blockchain trilemma on a Monday afternoon when it's a full crescent moon and Jupiter's passing Venus's anus, then we're gonna solve it, And I'm just like, dude, I finally have somebody that can talk Kadena with me. So I'll shut up right now. Let's get into that next interview, man. It's an honor to have you on the show, and we'll wrap it up.
Thanks a lot, Ryan. I really appreciate it. Thank you for your time today.
Anytime, man.